And I think the opportunity here is quite robust. And I think we're seeing it particularly in Bitcoin, which despite a banking crisis and bank stocks collapsing as much as 100% in some cases, Bitcoin went up 30%. So wait, what gives? Store of value, flight to safety.
In a recent interview, Morgan Creek Capital Management CEO Mark Yusko discussed the impact of the banking crisis on Bitcoin's price gains, the Fed's interest rate pivot, Operation Chokepoint 2.0, and CBDCs. Although Bitcoin's price has surged since the recent bank failures, there is little evidence to suggest that investors are viewing the virtual currency as a financial alternative. The collapse of 3 crypto-friendly banks in less than a month, including Signature Bank and Silvergate Bank, has shaken blockchain-linked firms to the core. This has caused around $3.3 billion of cash backing its token to be stuck for days in the now-defunct Silicon Valley Bank, leading to the temporary loss of the dollar value of USDC and impacting its reputation as a reliable crypto asset. Yusko noted that many companies marketing Bitcoin to investors have started referencing the bank runs in their promotional materials. Yusko tweeted that the cumulative fines paid by global banks for fraud and money laundering roughly equals the market cap of Bitcoin. The recent surge in Bitcoin's price can be attributed to various factors, including the growing optimism that the Federal Reserve will halt its interest rate increases. Additionally, there are rising concerns about the safety of stablecoins, a type of cryptocurrency designed to maintain a price of $1. Before proceeding further in this video, make sure to click on the subscribe button below to stay updated with our latest content.
But let's talk about the banking crisis to begin with. So you got the first part, which is, all right, was there a systemic or systematic clampdown on banks that were friendly to crypto? Chokepoint 2.0, it's been called. Yeah, I think it's actually pretty clear, right? I mean, that's not supposition or hypothesis or pointing fingers at the big bad government. It looks pretty clear that there were certain banks that were targeted early on, Silvergate and Signature Bank to start. But then something kind of strange happened in that Silicon Valley Bank, which really you wouldn't consider a crypto bank. It's more of a tech bank, a bank that was used by a lot of founders to back their businesses, but also used by firms like ours, venture capital funds, to fund capital call lines of credit. And, very large bank, very large business, huge growth market. And it got caught up in the second part of the crisis, which is this sudden realization. Now, why it's a sudden realization, I don't really understand, that these banks had unrealized losses on their government bond portfolios. And it all came to light on the Wednesday, a couple weeks ago, 3 weeks ago, when Silvergate had basically been crushed and put under, and Signature Bank was being crushed, and then there were some noises about some other crypto-related businesses, but Silicon Valley Bank basically had a little mini bank run. Some people withdrew some capital. So, the way a bank works is they have assets, which are our money, right? Us as depositors put our money in it. It's no longer ours. It's theirs. It's the bank's. And that becomes their asset. Then on the other side, they have a liability, meaning they have to pay us if we want our money back.
Following the recent collapse of several banks in the U.S., Mark Yusko suggests that it's not difficult to imagine the Federal Reserve using the crisis to its advantage. Although there haven't been any wide-scale bank runs yet and confidence in the banking system remains intact, central banks are already preparing for the eventual end of the fiat money banking system. In fact, some Fed officials believe that the crisis could even replace the need for a central bank digital currency. Montgomery, the FedNow program executive, called on all American financial institutions to move full steam ahead with preparations to join the FedNow service. While the Fed's intent might be noble, an unlimited deposit backstop would be a highly inflationary policy if implemented. In his tweet, Yusko pointed that American regulators have a mistaken perception that a globally decentralized network can be governed and controlled by one jurisdiction. 80% of Bitcoin is owned by non-Americans.
Couple people, and I won't point fingers, but everyone kind of knows who they are, sent these stupid ass, that's a technical term, memos to all of their underlying companies saying, get your money out. And they triggered a bank run.
Yep.
And bank runs are the one thing that can kill a bank.
Absolutely.
Right? I mean, fraud and bad management and all that can hurt a bank, but what kills banks is a loss of confidence and a bank run. Because the way a bank works, we've all seen the movie It's a Wonderful Life,
Yep.
is the money comes in, it doesn't get put in a vault and sit there. It gets lent out to other people, and then they deposit their portion, and then they lend it out again. And this fractional reserve banking system, I believe, creates wealth because you're putting money to work, increasing the velocity. But it requires confidence. It requires trust. It requires calm. Because if everybody comes in and says, I need my money, all of it right now, it goes away. So these idiots, in my mind, fomented this bank run. So anyone who has any knowledge about decentralized systems or centralized systems would say CBDCs are pure evil, like surveillance tools and control tools. Not a good thing. They're fiat, which is bad to begin with, on steroids, which is super bad. So think of the Terminator, right? So that's what this thing is. Why would anybody want that? Well, only if they've lost trust in the banking system. So if the Fed now says, well, these other banks, they're not safe. Look what happened to Silicon Valley. Look what happened to Signature. Look what happened to all these banks. They're all shutting down. Why don't you just put your money with us? It'll be safe. Put your money in the Fed. Put it in a CBDC. That is a dystopian nightmare that I really am truly afraid of.
Mark Yusko believes that the Federal Reserve is unlikely to raise its benchmark overnight interest rate in May, and even if it does, it will likely reverse course quickly and end the year with rates lower than they began. This is reflected in the CME FedWatch tool, which shows that Fed funds futures prices now indicate nearly even odds of a 0.25 percentage point rate hike in May, which would increase the target range to 5%, 5.25%, versus remaining at the current range of 4.75%, 5%. However, given that the Fed aims to achieve 2% inflation, central bankers may be cautious about declaring victory too soon.
I think, to answer your question, what's the Fed going to do? I think they would like to keep raising, to keep restricting liquidity, and to keep increasing the NIMs. But I do think they're likely to pause in the rate of increase. So my guess is the next meeting, they won't raise again. There's some that say, no, the crisis is so bad they need to cut. I don't see that. I did actually hear a pretty compelling argument yesterday from someone saying that there's absolutely a cut coming in the beginning of Q3, and that will coincide with the launch of the CBDC, again, to basically say, okay, now interest rates are going back to zero. The only place your money is safe is in the Fed. That actually, if that happens, then it's all sinister, it's all planned, and all bets are off. But that could happen. But I'm not there yet. But I think it's a compelling argument.
Despite market expectations, Fed policymakers indicated earlier this month that they anticipate one more 0.25 percentage point increase in interest rates this year. Moreover, they don't plan to implement any interest rate cuts until 2024. On this note, we conclude today's video. Do you agree with Mark Yusko's perspective on the banking system and confidence game? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will continue to bring you more updates in the future.